friends, this is Raman Gill with your weekly Forex market analysis for November 7th, 2016. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. As usual, we'll start off by taking a look at our economic calendar. Big week for the US dollar this week, so we'll take a look at that. Then we'll move into commitment of traders data to understand how the bigger players are positioned. And finally, we'll take a look at the charts to see what we have setting up for this week. In terms of our economic news for this week, we start the week off on a quiet note here. We just have German factory orders on Monday and then Halifax HPI numbers for the British pound. We also have Eurogroup meetings all day on Monday. And the important data here is trade balance number for China. Going into Tuesday here, we have manufacturing production numbers for the British pound, and then we have Joel's job openings and mortgage delinquencies for the US. However, the most important thing on Tuesday is the presidential election. So up until then, we can expect to see a lot of volatility in the market. The US dollar started dropping after we heard reports that the FBI had opened their investigation again into the emails, into Clinton emails, and that had a negative impact on the US dollar because the market was expecting Hillary Clinton to win. So in terms of the elections, the way things stand at this point is that market expects Hillary Clinton to win. However, the FBI investigation reopening threw a wrench into that, and because of that, we have been seeing polls coming out that show that Trump is catching up to Hillary Clinton in terms of how many votes he's expected to get. So this has increased the volatility in the market. So going forward now that FBI has actually cleared Hillary Clinton of any wrongdoing there, we have seen the US dollar jump up as a result. So going into the elections, there will be a lot of volatility, and post elections, if Hillary Clinton wins, it will be good for the markets. The markets will like that, and we can expect the equity markets to jump up. And if Trump wins, that will not be positive for the markets. We may see equity markets drop as a result of that. So those are the two scenarios that we're looking at the moment. Overall, the market would prefer Hillary Clinton to win just because everybody knows about what her policies are and what she's expected to do in terms of going forward. Market is really expecting just status quo. However, when it comes to Donald Trump, market doesn't have a lot of experience with Trump, and as a result, they don't know what his policies that he'll be pushing forward. So he's a bit of a wild card, and as a result, market doesn't like that too much. So going into the election, I would suggest be very careful if you're trading the US dollar, anything against the US dollar, because we can expect to see market moves as soon as we see more polls coming out or based on the early results that start coming out from the election. Going into Wednesday here, we have US crude oil inventories here. We also have economic forecasts and trade balance for the British pound here. Most important here is the official cash rate, which is the interest rate for a New Zealand dollar. We also have Reserve Bank of New Zealand rate statement and monetary policy statement, followed by the press conference. This will create volatility for the New Zealand dollar. If we see any kind of a deviation from here, that could cause the price to either jump up or go down. Right now, the market is expecting a rate cut by Reserve Bank of New Zealand. However, if we do not see a rate cut, if they just maintain the rate, that will be positive for the New Zealand dollar. If they do cut the interest rate, some of that is already priced in. However, we should still see a drop in the New Zealand dollar. Overall, the bigger surprise will be to the upside if they choose to just hold the interest rate at 2%. Going into Thursday here, the important piece will be unemployment news and then NHPI numbers for Canadian dollar. On Friday, we have FOMC member Fisher speaking, and then preliminary UOM consumer sentiment numbers coming out. And in the later morning here, we have Bank of Canada Governor Pola speaking. Friday is also a holiday. It's a French holiday, and it's a holiday in both Canada and the US. So the markets may just go sideways on Friday. So overall, in terms of news, we don't have a ton of stuff coming out. The presidential elections for the US is the key event here that will drive a lot of market volatility. So we'll watch out for that. Looking at commitment of traders data, here we have Euro US dollar numbers. As we can see here, the leverage money short positions are increasing. So this green line here, we see it has gone from 152 to negative 157. So this is a increase in the short positions, which is negative for the euro. However, one thing to keep in mind though is, as we see over here, when the market positioning is in the extreme, so we see the blue line very, very far away here from the green line. They're moving in opposite directions, which they normally do. But once we see that these extreme positions, which is what we're seeing here as well. Looking here, as you can see, the price moved up after that. So we may be into that scenario. So that's something we'll have to watch out for in terms of the risk. But at this point, we are seeing increase in the short positioning for the euro, which would be negative for the euro. In terms of the British pound here, we see that the positioning has been fairly neutral. We haven't seen a big change in terms of the positions here from leverage money. Canadian dollar here, we see that the short positions for Canadian dollars have actually gone up. We saw that the oil has dropped quite a bit last week, and as a result, Canadian dollar CAD went up. So here we are seeing that the short positions for Canadian dollars have increased. They've gone from 13,000 to 18,000 negative, which is negative for the Canadian dollar, which means we could see US dollar CAD go up. Aussie US dollar here, we see an increase in the long position. So we've gone from 41,868 to 47,233. So that's a substantial increase in the long positions here, which is positive for the Australian dollar. And one of the potential trades we may be able to see here, just based on the market positioning, would be Euro Aussie potential short trade, because we see an increase in Euro short positions, whereas we are seeing an increase in Australian dollar long positions. So there's a big disparity between the two pairs. So based on the positioning here, we may be able to see a Euro Aussie short trade this week. So here we have New Zealand US dollar. For a New Zealand, we have actually seen a slight increase in the long positions. We've gone from 20,019 to 20,943. So that's a slight increase in the long positions for a New Zealand dollar. However, there is an interest rate statement coming out this week. So that is something we'll have to watch out for, because that could make a difference in terms of New Zealand dollar. Let's move on to the charts now. We're looking at pound US dollar weekly chart. Here we see a very, very strong candle close to the upside here. Last week we saw pound push up strongly. Part of the reason was because Supreme Court ruled that the Prime Minister Theresa May cannot invoke Article 50 on her own. She needs the approval from the Parliament. The market saw that as a bullish signal for the British pound, because at this point that means there is more room for negotiations in terms of Brexit. We may get a soft Brexit as opposed to a hard Brexit, and markets saw that as a positive. So we'll see this week what happens, but in terms of the weekly candle close, we are very bullish and would look for a move to the upside. Here's our daily chart. Based on the daily though, we are seeing that the candle close here was very small candle, and right now, because of the volatility in the market with the FBI clearing Hillary, we did see a drop in pound dollar as a result of the gap down because of the news. So at this point, if the price stays below this support and resistance swing high level here, 125.50, we could see the price come back into this previous range. However, if we see polls that suggest that Donald Trump may be leading in the race, that could have a positive impact on the British pound, and we could see the price break the high. If the price does break the high at 125.50, we're looking for a move to the upside. The next target we'd be watching out for would be the 126.20. 126.20 level, this top of the candle here, 126.20. So that will be our next target to the upside. However, if the price stays below 125.50, we're looking for a pullback, a move to the downside, and the target here would be 123.20. So those are the two key levels we'll be watching here. Looking at Euro US dollar weekly chart here, we see a very bullish candle close in Euro as well. This would suggest a move to the upside. However, it has been in this bit of a range. We saw a reversal signal here and then a move to the upside. At this point, the next target will be this 1200 level. If the price moves beyond that, we are looking for further move to 1380 level, which is this price support and resistance level here. Based on the weekly chart here, we are looking for a bullish move. However, again, the elections will have a big impact on what happens here. This is the price drop that we saw because FBI cleared Hillary Clinton. As a result of that, we have seen a move to the downside for Euro US dollar. If that continues, we can expect the price to come back lower here, maybe even potentially towards the 110 level here. New Zealand US dollar weekly chart here, again we see a very bullish candle close. However, we are into this support and resistance for New Zealand dollar here, 73.70 level, and this week we are looking for a rate cut announcement. As a result, we may see New Zealand be slightly bearish going into the rate statement. Here we are in terms of our levels. We've seen a push up for the last few days, and now we are seeing the price turn around. So at this point, we are looking for price to pull back and potentially go into this pin bar here, which is at 72.67 level, and beyond that we're looking at 72.30 level as our next support and resistance area. Overall, we may have a slightly bearish bias on the New Zealand dollar because of the interest rate statement later this week. Aussie US dollar weekly chart, again very bullish candle close. However, we are trading in this range. We've been in this range for some time now, since July, and we haven't been able to break this range out yet. So at this point, we are looking for price to react at 77.30 level here, or if it pushes higher, we're looking at 78.20 level to the upside, and then see a reaction at either of these two levels. So we'll be looking for a bounce off of this level, which is 77.30, or a bounce off of 78.20 level for the short term. In the long term though, once the price breaks above the 78.20 level, the swing high here, we are looking for a move to the upside, and we can look for price to go and touch 81.60 level here. Dollar CAD here, we have seen the weekly candle close in a very neutral manner. We see a spinning top here. At this point, we could see a reversal if the oil picks up. Oil has been very bearish. It just fell off the cliff here. Now if the oil starts to go up, we may see dollar CAD push lower. If that doesn't happen, we may see the dollar CAD push up even higher and go test the high here at 174.80 and then go into 135.82 level, the 80 level here. So those are the two levels we'll be watching. If the price stays below 134.80 right here, the top here, we could expect a move to the downside. However, once it breaks through, we are looking for 135.80 level to the upside. So that's it for now. I will see you next time.